we start with American Pacific. James asked why the stock has recently dropped from 50 to 30, 40, right now 30 something, high 30 cents. It's a volatile. First, I tell you, it's a volatile stock. Okay, I tell you a true story. In March, I put a bid to buy American Pacific, my own bid at $2.50. Okay, I put a bid at 2.5 cents in March, and it was filled. So it does tell you that the stock is very volatile. They did a 3-to-1 split. So right now it's 7.5 cents, and I got it. I got the lowest. So it's, there, as I explained earlier, we have this election coming. We have a lot of things. Are we going to go to war with China or not? Or who's going to be president? So there will be a lot of up and downs. Like the stock, all these junior stock can be very volatile. So you need to pick your time. You buy when nobody is buying. So you tend to pick the best value. So now I'd like turn to Warwick, and can you explain the recent weakness of your stock, or maybe because of your exchange? Do you have any plan to go to a more like a venture type of exchange that bring more liquidity to the company?
Yeah, Chen, I think you touched on it fairly well. I mean, the company did a 3-to-1 rollback when we acquired the Madison project, which was the way to get the transaction done. And the company was trading around 6 cents at that time. It's gone as high as 64, I believe. It's presently trading around 43 cents, I believe, when I looked a little bit earlier. The stock's run and pulled back a bit. I think that's fairly natural when you have a big run up in the stock price. We had traded from, I'm trying to get my math right. I think it was since the rollback, we've traded 21 million shares, which is essentially what's out on the company that's available to be traded. So it's rolled once. So it does trade good liquidity. The CSE has become more of a popular exchange. People down in the US can trade it now. We do have a US symbol as well. We do intend on eventually moving to the TSX Venture, and that's something that we're looking at as we speak. We're also uplisting in the US onto the OTCQB. We're in the process of doing that as well. So we're getting bigger as we go. This was a transformative transaction for the company. When we say it's a large company style target, we've already got Rio Tinto involved. So I think we show that it's a real size target. With that, the company itself needs to grow as well. So yes, uplisting to the venture, I think will be good for us. We're in the process of uplisting to the OTCQB. And we hope that volatility continues on an upward trend coming in the next little while.
Great, thank you, Warwick. Can you give us some vision of your company? What do you see from there? You have 3 projects. Kudos to you pick up the 3 projects in the downturn of the market at the penny on the dollar. So what you see growth for the company? You already have farm out 2. Well, one with Rio Tinto, and then another one with a private company going to public very soon. So how about the 3rd project? And then what kind of partner you're looking for? And then what's your vision for the company in the next year or 2?
Okay, let me explain. I think one of the things that makes American Pacific interesting is it is a joint venture company, but we're a little bit different than some of the other joint venture companies. A lot of the JV companies that are out there, or prospect generators as they can be called, focus on kind of greenfields assets. They bring in partners. It's a great business plan. It's a great way to run a junior mining company in my eyes. What we do that's a little bit different is we've been able to pick up more advanced assets. Tuscarora is a great example. It had a good amount of drilling on it, a good amount of success on it. We just brought in a partner for that. We had a partner previously. Same with Madison. It's a previously producing mine. It has Rio Tinto as a partner. The game plan will be to bring a partner in on Gooseberry, although there has been some debate that we may drill that ourselves, some debate internally. So we'll focus on that and have a succinct game plan out on that in short order. All 3 assets are brownfields, either have discoveries or are in the process of making discoveries or have been in production. So that's what makes us a little bit different on the joint venture side. Our intention, Chen, is to grow. It's about a $30 million market cap company now. We are looking to transact on other assets. that can help us become that $100 million growth story. That's where we want to get to. We want to get bigger. So what we've done is we've been speaking to some of the mid-level banks in Toronto, working with them, getting that institutional base following, which we haven't had before. We're in a position now with the Madison asset that we should be able to do that, and we're getting traction on that. That's exciting for us. That should be exciting for our shareholder base. Good, sophisticated funds coming in will help us a great deal. So that's the vision going forward. Growth from here, add additional assets, and see the company become much larger than it is today.
Great. Thank you, Warren. Okay, next we have a few questions for Claudia. And first is Graham Walker asked, Claudia, I missed the first few minutes of presentation, but in case it was not discussed, can you provide update on current drilling plan? How many holes exactly are you drilling? And then have you been drilled, so far drilled since July? How many holes do you drill at the gate zone? When we're going to be moving to Kodiak, and how deep are those holes gone so far? That's first question. Maybe you can get started.
Yes, thank you, Chen. Thank you, Graham, for the question. So our current drill program will be approximately 4,000 meters. It's round about 3 times the size, 2 to 3 times the size of our initial maiden program where we made the discovery. We are roughly 40% through at the moment, and we are drilling holes similar in depth to our discovery holes, so down to 700-800 meters. So if you do the math, that's anywhere between 5 to 8 holes that we will probably drill. At the moment, we are at the gate zone, and we will have, that's the main focus of our current drill program. The most of the meterage will be spent there. And then at the end of the program, later in August, we will go to the Dillard zone and drill at least 1 hole in this anomaly that looks very, very similar to the one where we made the discovery. So we'll at least poke 1 hole into that discovery as well, into that anomaly, sorry, as well.
Okay, great. So, there's another question from Amos. They're asking the cost of extraction mineral when they're getting deeper. I guess it's probably this is underground versus open pit. And then he wants to know what kind of a matrix you're looking at, when they're getting deeper, the cost to extract. So he's probably thinking about future buyers of your project, or if you're not going to bring this up into production, and that something. So most associate the cost of extraction mineral with the increased steps. So his curiosity was when to get deeper, how much more to extract those. So, or on the economics of the project, if you can compare yours with other world class, copper gold. So what type of grade will make a company maker? I think that's probably everybody's looking at, because Great Bear has such a big success. There's a lot of investors looking at the Kodiak drilling program, and then the thinking is, okay, so what you're in BC, you're in the mining camp, but what kind of grade will make it?
That's a good question. In terms of grade, I would say the best analogy, or the best place to look, are mines in the area. And we're fortunate, we have Copper Mountain, which has very similar geology right next door from us, 30 kilometers away. And they are, for us, a yardstick of what we look at in terms of what grades could be economic. And as I said in my presentation, their reserve grade is 0.24% copper with a little bit gold on the side. And that compares very well to what we drilled in our discovery hole. We were at 2.8 0.28% copper equivalent, and some much higher grade sections up to 0.68% copper equivalent. So the same or higher than what we see mined next door. And that gives us a lot of confidence that we are onto something economic here that will eventually become economic. And then to your question on depth, when we started drilling, our thesis was we'd have to drill deep to get better grades. And we were then very pleased to see that actually our best grades were just below the shallow historic horizon. So just below 200 meters, between 500 meters down is where we got our best grades. And that's very encouraging. And actually, we think we might be able to chase higher grades even closer to surface. So we're not looking at a very deep scenario here. We are relatively shallow. If you compare, for example, to GT Gold, which is also a very successful porphyry exploration company further north in BC, they've been drilling down to 1 kilometer, 1.5 kilometers, much deeper than what we are currently seeing where we are.
Okay, great. And you're at the southern BC, close to infrastructure, close to highway. So at your depth, it can be much more economical, even with the lower, slightly lower grade. But of course, you're looking for the bigger one, the higher one.
Yeah.
Okay, great. So can you just summarize again? I know everybody follow your drilling. So what time people need to start watching your stock every day when you see the drilling results coming up?
Mm-hmm. So our timeline is late August for our drilling results. So it's only going to be a couple of weeks. Obviously, you never know exactly how long your core takes in the lab and how easily it's processed, but we're shooting for late August for the first results, and then through September, and the rest of Q3 we'll have the remaining results. So okay, it's only a couple of weeks. To me, it seems a very long time. I'm very impatient. I'm very much looking forward to reporting back.
Yeah, it's an exciting time. I remember last year we were talking about the drilling. Now it's you start drilling, it's drilled, and then results going to come out. So you plan to come out with the compile together, or you just release it as you receive the drill hole?
We will see how the results come out, but likely we'll have 1 or 2 drill holes with our initial results release, and then we also have some gold sampling results that'll come out around the same time, and then further holes later in Q3.
Okay, good luck. As a shareholder, looking forward to the results.
Thank you.
Okay, that's next for Quinton. There's quite a few different on the NuLegacy. So first, the Ron Shore. Oh, that's our neighbor. He's a geo. So he's asking, do you see a lot of rift anticlines, or you saw only one? That's the only one you're looking for.
If I understand the question correctly, Chen, sounds like he's wondering if there's multiple targets on the property. I guess what I would say is we're looking for one big target. It could be that it's actually in pieces, we don't know. But the concept here is that we're looking for a very large Carlin-style system, a blanket-like body that's going to be fairly expansive through that rift anticline zone. The slide that shows the different colors ranking targets is probably the best one to reference. It could be that we see a pattern more like that. Don't know yet. We got to explore it. But, the prize here is really a big, big fish.
Yeah, everybody got excited. So there's another Robert Copper concerned about the share count. So do you have a plan, maybe reverse split to smaller shares? You have a 500 million, but again, the company has been here for a while. So to make a tighter share structure?
Look, I'm not a director, nor am I management of the company. That's a question better asked to them. But as far as I'm concerned, my view is I'm not too worried about the share count. Look, as you know, I spent a lot of time in Australia, and there's a lot of ASX listed companies that have share counts like that. But it's not look, what I'm looking at is the ultimate value of the prize here. You find a very large Carlin system that's a kind of prize that's going to underpin a lot of value here. So, yep, it's all relative, right? I would say, whether they decide to roll back or something someday, that's up to them. If it were done, I'm sure they'll do it at the right time. There's times to roll back, there's times not to. So that's my view.
Okay. So Dan Christopherson asked, is there any surprises from recent C-scan data you survey you did at Red Hill?
Yeah, the CSAMT data, this is the data that I showed cross-section for. No, it's actually showing a very predictable model, the anticline model. So that's actually quite comforting. It shows us in very discrete terms where we think, where we can interpret faults as well as the overall anticline feature. And now we can see it in 3 dimensions. So that's giving us great comfort. The target is nice and continuous and, very, very robust in that area.
Oh, great, great. Again, just remind us, what's the timeline you plan to start drilling, and then when investors should expect to see, the discovery hole, hopefully, finger crossed.
Okay, so the timeline, we're gonna get our permits, expected to get our permits in September. They've already started queuing up, drill contractors, so that's not an issue. The guys that run the exploration, Mark Bradley and his team, seasoned barrick geologists, so they have good contacts throughout Nevada. I would expect them to start drilling in October. The drilling will be continuous. Again, we're doing fences of holes. So, basically we're looking for that big prize down there. It'll take some time. Don't get me wrong. I've drilled a lot of holes in Nevada. I drilled, the Carlin discovery for Evolving years ago. And you have to put in pre-colors. So you basically drill down an RC hole down to a certain depth. You try to get through the worst, overburden material. And then you go core below that. It takes a little time. It's a little bit of engineering. But, it's all quite manageable. The team there knows how to make these holes go down.
Okay, great. Thank you, Quentin. Hopefully your magic will work again.
Fingers crossed.
Thank you. Okay, next we have Alexco mineral. We have quite a few. First, what's your plan to deliver the concentrate to smelter or to refinery? So he basically want to know what, how do you deliver those your products, your concentrate? Brad, if you maybe you didn't unmute.
Oh, there we go. Sorry, I was on mute. Yeah, thanks for the question. Yeah, we make a concentrate, so that means it'll go to a smelter. We haven't selected an off-taker or destination yet. Previously, when we were in production back in 2010 through 13, went to a smelter in North America. There are other possible destinations overseas. Asian smelters, and it's really all about economics and logistics. So again, we haven't made that choice. We should be doing that here in the short term, but I guess the message is there's high demand for this concentrate. So when we're just really going through all of the offers, or I guess proposals, if you will, right now, and making sure we really think it through and get make the best economic choice. But again, there's a lot of demand for it, so there's certainly no concern of where it's going to go or how. Well, that somebody will take it.
Okay, thank you, Brad. The next question was about the silver royalty. So I understand you recently reconstruct the royalty with the Silver Wheaton, and it's become much more favorable. It's even if silver goes down, you have a much more cushion to support your mining operation. Can you explain us about your new royalty structure?
Yeah, so the previous agreement before we just renegotiated this, Wheaton Precious Metal still has 25%, a right to 25% of the silver, but the previous agreement had both a mill head grade and a silver price component to it. So it was a somewhat complicated formula. As silver price went up or down, and as mill head grades went up or down, there was a relationship there, and they paid us more or less for their 25% silver. So we have simplified that agreement. It's all driven now off a silver price only. They'll still take 25% of the silver, but now the formula is simplified and it's based on a percent of the spot silver price. And it does two things for us. It does provide, downside protection. So, I mean, if silver were to, retrace back even to the $17 range, whatever it might be, we can get up to 90% of the spot price if silver, falls. But on the other hand, we now get paid more on the upside. Before that, there was a point in the previous agreement we didn't receive any payment for the 25% once silver got to a certain rising price, and now we do get paid for any price increase into the future now.
Okay, great. Thank you. The next, actually, both there are two questions about asking. Two persons asked the same question, Amos Almond and the Ron Jones. And they asked about the weather, right? The winter. What impact winter? We know it's very cold. But I've been to your site. It seems to very well constructed. Can you explain if there are any impact of the harsh winter to your?
Yeah. No, sure. Yeah, I mean we are in the Yukon. We're in the north, if you will. First of all, I think as I described in the presentation, we really have excellent infrastructure. I mean, the Keno district has been around for decades. I mean, it started off in the early teens. So. We have an all-weather road. We can drive to the site. You can fly to the airport in Mayo, and then it's only a 25 to 30-minute drive. We're connected to the Yukon power grid. I mean, so we have hydropower. We don't have to generate power or burn diesel. So from that aspect, I mean, again, being in the north, the infrastructure is excellent. And again, we're an underground mine. So when it's 40 below, it's above freezing underground. We do have to heat the air, but it's 2 to 3 degrees Celsius underground all the time. So, and actually, in some aspects, it's more efficient to operate in the wintertime. Depends on the conditions. So, we operated again 2010 through 2013 through several winters, minus 40 degree weather, and it's the mine is designed for it, and that's. And we're pretty experienced in that. So it really has. I mean, there's a cost component to it, but we're well experienced to operate in the north.
Okay, great. There's another question asking the Paul Kukros, asking about if you have any hedging strategy going forward.
We don't right now. I mean, I think certainly foreign exchange. The U.S. Canadian dollar is an important piece that that we may consider. Some risk management, if you will, and I think that's what's really important to recognize. Even in today's pricing environment. I mean, silver $26, $27. I know you talked about the U.S. dollar, Chen, but I mean the U.S. dollar continues to be fairly strong, if you will. So from a Canadian silver price perspective, I mean Canadian silver today is $36, $37 an ounce. So I don't think we'll ever hedge our silver. I mean, we already have somewhat of a hedge in place already, but certainly the foreign exchange is something that we might look at.
Okay, great. Finally, Howard asking when exactly, months you're looking to produce, start production, and what's the cash total cost? I think you probably covered that. Just reemphasize repeat that to the audience who has a question on it.
Yeah, no. So again, we're underground at Belkeno. So the strategy here is to salvage out. Some of the remnant tons at Belkeno. We'll commission the mill on that first. We're underground at Flame and Moth. So our current guidance is certainly the fourth quarter of this year. Hopefully earlier in the quarter than later in the quarter. But again, we're certainly on schedule right now to be shipping concentrate off-site and concentrate sales in the fourth quarter of 2020.
Okay, great. Thank you, Brad. Good luck.
Thanks.
Okay, finally, we have Golden Mineral. Hi, Warren. So basically, I have quite a few questions just as a shareholder. You recently raised 7.9 million, right, US. So what did they carry you all the way into cash flow positive? Do you envision that?
Yeah, it's certainly more than enough to get us through to production at Rodeo. and we think it'll get us potentially even into production at Velardenia, depending on the ultimate cost of constructing the biooxidation facility. But yeah, it's good to have it. We were looking at other ways to finance getting all the way through to Rodeo. We considered debt. We considered some kind of offtake, but this was the best way to go. And it gives us some breathing room and ability to advance our exploration projects while we're getting there. So it's a good move for the company and for the shareholders.
Oh, great. So you have a fully working and fully permitted mill in Mexico, right? Currently, you're leased out to Heckler. So what's your plan? And then next year, you plan to bring your own production to replace so instead of leasing them out?
Yeah, Heckler had the option to continue their lease through the end of 2020. They notified us recently they'll be done in November of this year. So we're prepared to start bringing in our material from Rodeo using a contract miner. We'll haul it in and start production currently scheduled for January, assuming we have the mine permit in hand this fall. So that's the plan, Jen. We actually have another fully permitted mill, the sulfide mill, that is on care and maintenance, and that's what we'll use to initially process the Velardenia ores before the biooxidation, and then the biooxidized portion would be processed at the oxide plant. So yeah, two fully permitted mills, all the infrastructure that we need there in place, and we're just waiting for the mine permit so we can get going, starting the extraction at Rodeo, and then moving on from there.
Okay, great. Do you envision your mill needs some tweak, or it needs some little work so that to process slightly different ore than Heckler, or is it very similar type of ore?
The Rodeo ore is a bit harder and has a higher work index. So we're looking at ways that we can optimize the throughput in the mill. So we may do a bit of a modification on the grinding circuit to give us the throughput that we're looking at. But that's been fully contemplated in the cash cost to start up. The 1.5 million gives us more than enough, including contingency, to make those changes. And we think we'll have an opportunity to start making those changes before Heckler is done.
Okay, yeah, there's a question
in November.
From the audience. Howard asking what's the total ounce you produce, ounce per year, and then your cash cost, but I think you covered that some in your presentation. Maybe you just remind us what you see that people want to see what the cash flow you're coming, cash flow, free cash flow, or just explain what kind of you see in a year or two.
Yeah, so from Rodeo, the projected cash cost to start with is just under $800 per gold ounce, a net of a bit of a silver credit. So that gives us, at the PEA pricing at $1,600 gold per ounce gold. That's about I think it's a $12 million cash flow in the first year. And obviously at $2,000 gold, it's quite a bit more. It looks like it'd be more like 16 million to me using projections, assuming everything goes to plan. Bear in mind, this is a PEA. We don't have a feasibility study out, but it's a very simple deposit, and we don't see any real significant changes to those projections.
Okay, great. That's very, once you start production, hopefully that's your cash flow start building up, and then you can go on to build a bigger mine. So
yeah, we're definitely looking forward to that.
Exactly. So you started in Argentina. I remember the good old days of golden mineral when you hit $20 when you have made a discovery in Argentina, the silver project. So explain to us maybe what, and we know Barrick looking for 5 million ounces of gold equivalent minimum, right? So what is Barrick looking for in your Argentina project? And how long do you see, how long do they take for them to prove that?
Yeah, great question, Chen. So they have an option for 8 years. They have to spend a minimum $10 million over that 8 years and deliver a pre-feasibility study, formal study to us showing a discovery of 2 million ounces of gold or more in order to vest. They'll accelerate that if they have good success early on, or they'll hand it back. Meanwhile, they're not very interested in the silver deposit that we found, the Yachte. It's a little bit too small for Barrick, but they recognize what they see as being classic signatures for the gold deposit they're looking for nearby. They think our silver deposit's peripheral, the gold deposit's just to the north, and that's what they're going to try to drill for. They did offer us an extra royalty to compensate us for the silver deposit that we found. In case when they get into production, then we get an additional 5% NSR royalty on the silver stream from anything they produce, which would give us compensation for the Yachte deposit that we found, but we didn't put into production. So it's a great deal for us. I know we'll get excellent work from Barrick, premier company in the world in terms of gold company. And they'll either have success or hand it back to us with good advances on further exploration on the district.
Okay, do you know when we will hear some news? If Barrick hit a whale like Quentin is looking for in Nevada?
Yeah, they've been slowed down a bit given the COVID response in Argentina, which has prevented work in the Altiplano. But they're getting going now. They're going to do some groundwork first. I expect they'll start thinking about drilling next year. We do get quarterly reports, so as soon as within 3 months of anything they find, we'll be able to put out some news flow. So we'll hope that they can get started here fairly soon and have continued success.
Okay, great. Thank you. Good luck, Warren. Thank you for tuning in to Metal Investment Forum. And unfortunately, our time is up. I know you probably have more questions. Feel free to reach out to companies, and they all have their website and information, and can contact the management for additional questions. Again, thank you. And thank you for tuning in for today's show.